So when you sell a business in Australia or any asset, it's probable that you have to pay GST, which at the time of recording, and since it came in about 25 years ago, is 10%. So in addition to the purchase price, you have to pay 10%. That's unless the going concern exemption applies. So this is if you're selling something that's a going concern business or a going concern property, for the purpose of this business, then you don't have to pay GST in addition to the purchase price. And it's an exemption that's been in place since the beginning of the GST legislation back in 2000. So often what comes up is a question about whether or not when someone's selling a rent roll, whether or not GST applies to the transaction. The short answer is it depends. It's like the annoying lawyer answer, right? And it does depend on what's being sold and how it's being sold. If the rent roll is the whole of the business, then it's definitely the sale of a going concern. If you've got a rent roll that's part sales business, part rent roll, then there's an argument to say whether or not it's a sale of a going concern. And this is really a question for an accountant, and if the accountant's not sure, then it's a question for the for like a tax lawyer to have a look into, and we can assist with that. Generally speaking, it will be the sale of a going concern. However, that is a decision for the accountants to make sure that they believe it can be justified going forward. So it's one of those annoying ones. It's the it depends answer, but it is important to realise that this is a live question, something that you need to deal with. All right, that's what we've got for today. If you've got any questions around that, please comment below or shoot us a message. We'd love to help you out. Have an awesome day.